Active listings just hit a new high for the 9 counties that make up Greater Nashville. And this is very different pattern than happened last year. And when we look at the charts, there's one thing that sticks out to me. Now, we're going to come back to this. But first, mortgage rates hit an almost 18-month low. We have to go back to April of 2023 to see this low in interest rates. And it was apparent then it was boosting demand, but this time seems to be different. So what's driving mortgage rates right now and how could it change? So let's just take a look at some of the things we're seeing, and we'll kick it off with Elon Musk talking about the rise in prices, aka inflation is caused by government overspending, which increases the amount of money faster than the increase in goods and services output. Guys, as long as there's a massive deficit, we are putting ourselves in a position for inflation. You heard from Elon Musk. Take his word for it, don't take his word for it, but I could not agree more. And here you can see Joseph Wang weighing in and just saying, look, it's true. Government buys stuff and pays by printing treasuries. A 6% fiscal deficit forever is obviously structurally inflationary. And that leads me to, I know that mortgage rates dropped this week, but there was also later in the week a 10-year bond auction, which tied for the third worst bond auction in the last 7 years, according to Jim Bianco. There's a lot of stuff going on here, but the fact is like, if there's inflationary pressures, deficits of $2 trillion, loaning the government at 4.28% for 30 years, are you kidding me? Are you kidding me? Why would anybody do that? I don't know. I get made fun of for saying that, but I'll take the other side of that bet anytime. I think it's silliness. It's crazy. Now, in case you're wondering if there are inflationary pressures we do have to watch out for, Anna Wong, if you're worried about inflation, it may not be a good idea to cut. She calls out a hurricane season could potentially be inflationary. Jamie Dimon calls out war as potentially being inflationary. There's a lot of things right now that are potentially inflationary. Look, I'm not saying that the 10-year won't drop. It certainly dropped further than I would have expected. In fact, when we looked at the mortgage rate, you can see mortgage rates dropped to an 18-month low, almost 18 months. We have to go back. Let me zoom in on this. We have to go back. Look at this. On Monday, it dropped to 6.34. Have to go all the way back to April to see something like that. 6.34, April 7th. Now, if you have an obnoxious real estate agent like myself, you probably would be texting all of your buyers to refi that you knew might need to refi. And I'm glad I did, because you can see how short-lived this was. Boom, look at that. Bounced right back up. Almost, what is that, a quarter of a point? 30 basis point, whatever. Bounced way back up to 6.5, but not before we got a 5.99 for one of my buyers. So my buyer, he got a 5.99 interest rate locked in, not buying down points, only a $1,300 origination fee. He's going to save almost $1,000 a month. Almost $1,000 a month for doing that. Just know I'm thinking about my buyers even after they bought. So I want to make sure if you have an opportunity to save money after, $1,000 a month. That's a lot of money. So I'm pretty proud of that. I'm going to brag about that. Pretty proud of that one. So let's take a look at GNAR's data, because guys, call me out. I forecasted a $499 for the sales price, which I said was higher than I expected, but it was $499. This one's coming in at $507. I was off. I'm going to explain why. And you're going to be severely disappointed, not in me, but in what is happening. Inventory down. Look at this. Went from 7688 down to 7423. What happened? Well, actually, what happened was Greater Nashville Realtors changed their methodology. And the way they changed their methodology actually boosted median price and tanked inventory. Now, you can see this because what they did, it wasn't a bad change, by the way. I just should have called them. I haven't called them. But I don't even think they know that this happened. But RealTracs changed the definition of some of the property subtypes. They used to have something called single family and condo. Now they call it detached and attached. You can see inventory from total, it went month over month up. But if you look at residential, it went down. Why? Because they shifted a bunch into condos and created, what I would say is misleading reporting. Again, I don't think it's intentional, but it certainly is misleading. And you have to be careful. I always use Greater Nashville Realtors really more from a credibility standpoint to show, hey, look, I'm tracking with what the reporting is, and you can see it beforehand. And of course, whenever they do a methodology change like that, it's quite upsetting to me and maybe, a couple other people. But I did get called out on Twitter for it. So I wanted to make sure that you guys knew, listen, my stuff is, I'm going to be honest, my reporting is more accurate than the Greater Nashville Realtors. And that's not a brag. It's just I care about it more. I care way more about the data than anybody else I know. And so when I see a change like this, of course, you don't think I spent a couple hours studying exactly why I was off and how the changes impacted me and the way Greater Nashville Realtors is reporting now? Of course I did. Of course I did. That's what I do. Guys, this is the month. We're above 2019 levels, even according to Greater Nashville Realtors. Again, use that top line number, 11,844. Let's go to 2019. Go to July, 11,550. Okay, we're up above 2019 levels now. It's crazy. And what's even crazier, we got to get into this, is what is happening now. Now, you see my numbers different. I'm going to explain this difference, 7,185. Let me tell you what this is, which, by the way, that's a new high. You can barely see it, but it was 7,182. Let me zoom in on that. It was 7,182. Now it's 7,185. This is a change in trajectory than what happened last year. Last year, we couldn't get a new high all the way until September. This year, it took one full week into August, one full Saturday cycle into August, and we are in a new high. I'm telling you, the trend is much more up than last year, and it's especially in one county. I'm going to show it to you here in a second. But guys, the reason I'm showing 7185 and this is showing 7423, besides the thing I just told you about attached to detached, one of the major differences is they count inventory that's under contract if it's still showing. I don't count that. I feel like that there's absolutely no use in showing you something that's under contract and saying it's inventory. It's not inventory. It's not closed, but it's not inventory. So I keep that out. I put everything active and coming soon on here. That's a big methodology difference for me. If you were to get on Redfin and pull everything in Davidson, Williamson, Murray, Dixon, Cheatham, Robertson, Sumner, Wilson, if you were to get that, Rutherford, and pull all the active listings this morning plus coming soon, you would have gotten 7185. That's how it works. It's just super simple. I just take every single active or coming soon listing in those 9 counties and I plot it every single day. That's why it's so jaggy. Nobody likes jaggy. They all like smoothing it out. But I want to know exactly. If you were a buyer and you logged into Redfin today and you were looking in the Greater Nashville area, that's how many options you have right now. That's why I do it like this. Now, let's take a look. Let me show you contract volume real quick. Okay, contract volume it's not responding to lower rates. This is not what should be happening with lower rates if it's going to spur demand. This is not spurring demand. That is a recessionary, it's a recessionary response, to be honest with you. It's what it is. If your rates are dropping and it's not spurring demand, this is feeling recessionary, okay? Look, I'm not saying it's recession. I don't have any idea, okay? I've heard the debate. I watched the trade. I mean, there were people like, emergency cuts, Fed needs a cut, emergency cuts. And then they're like, oh, no, never mind. I mean, nobody knows. But what I will tell you is it is feeling more bearish. That being said, we've got CPI, PPI this next week. I can see mortgage rates bumping up. I can see them bumping up. But again, you know my take on that. I definitely don't think you should ever bank on rates coming down. I think it's dangerous. Okay, but let's take a look. This is what I wanted to show you. Okay, so this inventory breakout right here, this is very different than what we've seen all year. It's not really diverged from the pattern of last year. So all year long, even in the ups and the downs, we've been very consistent with the pattern of last year until July 15th. Now, what makes that interesting? This isn't just for active listings. This is also for contract volume. Let me show you contract volume real quick. Contract volume is falling. Normally it stabilizes, at least it did last year. It just continued to fall. So what happened in Williamson County? We went from being up 10% year over year to down 15% year over year. And we're talking about 2 weeks, 3 weeks. It started on July 15th. Let's take a look at it. What happened? This is interesting. And I really want to know your comments on this because I don't know. I really don't know. I'm not going to sit here and say I know. But the stock market peaked on July 16th. Okay. That is where contract volume kind of peaked in this late summer cycle. It peaked on July 15th, and now it's 15% below where it was last year. So here's my question. My question is this just a seasonal pattern that's kind of playing with last year and it's going to bump back up? Or is this a response to some nerves in the stock market? Now, I don't know the answer to that. I really don't know. But I do feel that there's a lot more uncertainty going into the back half of this year than there was going into the back half of last year. There's higher unemployment than there was last year. I think it's important that we really pay attention. Is this a sign? Are people in the wealthier category? Because remember, Williamson, the most expensive housing market, one of the most expensive in the nation, but the most expensive housing market in Middle Tennessee. And contract volume is dropping, coinciding. This is my question. Is it coinciding with the stock market, or is it just coincidence? I would really love your perspective on that. Look at the inventory breakout. We called this out. Look at the contract volume. When you take active listings and you divide it by that contract volume, you see that supply breakout. You're seeing it shoot up. This is unseasonal response. Okay, this is what I mean. Even though we're going into the fall, even though demand always diminishes into the fall, what we're seeing here is active listings shoot up and demand drop. Both seem to be unseasonal in Williamson County. Very interesting. It's not in the other counties. Look, I'll flip through. You're not going to see it. Well, you do see it in Davidson. I take it back. Davidson, same pattern here. But even in Davidson, the active listings are not, if we look at Davidson, you can see the active listings are not shooting up as much. Okay, we don't have a new high in Davidson County. It's close, but we don't have a new high like we do in Williamson. But the point is, boy, oh boy, look at that. Demand shot up last year. It's dropping this year. Definitely something to watch. Murray, similar pattern. Cheatham has been up year over year. It's such a small county though. I mean, we're talking about 67. It's really not that. Same for Robertson, very small county. Sumner, flat. That's surprising. But Sumner's actually got a lot of new builds. I had one of my buyers let me know Durham Farms has a ton of Lennar new builds. I need to dig into that one. Contract volume in Wilson up. So you can see the biggest changes happening right now are happening in Williamson and Davidson, the wealthiest county and the most populated county. It's very weird trends that are happening right here. And you can also see it in the active listings. Okay, so what does it mean for price? Well, we're not seeing the median sales price drop yet, but it's about to happen. And I can tell you it's about to happen because of contracts. Now, the one place that we are seeing it though, and this is fascinating, is the median contract price per foot has completely erased gains in Greater Nashville this year. Okay, so the median contract price per foot is now basically flat year over year. And what makes this interesting is obviously contract price per foot. I mean, it's price per foot. It's not median sales price, but does this mean that the home price cost values are actually dropping? They could be. We're too early to know for sure. But what I do know is that contract price was up 6% year over year just a couple months ago. Now it's completely erased the gains, and we could see this go negative year over year for Greater Nashville. It's something that we're going to continue to keep an eye on. If you said, Ethan, where's prices going to be in the next year? I have no idea. But what I can tell you, and the advice I can give you, is spend less than you earn and treat people the way you want to be treated. And with that, I hope you guys have a great rest of the weekend, and I look forward to seeing you next Saturday. Thanks a lot.